Zilliqa is currently going through the roof. In the last 24 hours, it went up by 40%, 40. It has been the best performing cryptocurrency in the top 100 in terms of market cap. So why is there so much movement going on? Does it make sense to jump on this rally right now? I've done a back test. I've done a simulation of buying and selling the ZIL token, trying to find the perfect approach of trading Zilliqa. So there's quite a bit to discuss. Let's jump right in. Hi, Zilliqa is moving away from this thought chain kind of model of having just a decentralized exchange that's cross-blockchain to this new story of being the platform of crypto gaming. But the problem with any altcoin, and especially for Zilliqa, is the high volatility. So when we look at Zilliqa historically, there's been quite a bit of a roller coaster ride. This was a 98% drop. So you invested $100, you've got $2 left after roughly 2 years. But even since the Corona crash over here, right, where we in general moved up quite a bit, we still had our temporary declines of more than 80%. This is an 86% drop. So this really shows the necessity of timing this properly, of getting into the token when momentum is positive and trying to exit when momentum turns around. This becomes even more obvious when we look at relative performance. This is Zilliqa not in US dollars, but in Ethereum, as in how did Zilliqa over the long term perform versus Ethereum. Now, what's interesting to note with this relative valuation chart is that when you stake Zilliqa, you get 15% per annum. If you're very smart about this, you can potentially also get this with Ethereum, with, for example, delta neutral farming or with interest arbitrage, things like that. But it's a bit more complex. So an apples to apples comparison shows quite nice passive income with Zilliqa. Now, how quickly is this actually declining versus Ethereum over the long term? So let's take roughly the middle points of this trend channel, and in here we've got a 73% decline over 1,476 days. So how many years is that? That is pretty much exactly 4 years, a bit more than that. So if we take the decline over the entire history over here, we check how much money do we still have left, that's 26.7%. Now we take this to the power of 1 divided by 4 years, a bit more than 4 years, then we see each year we have 28% roughly that we are losing. So this value minus 1 is 27.8%. This is currently the annual underperformance. So annually, Zilliqa historically underperformed by 27.8% in terms of price. The staking APY cannot balance this out completely, right? So you do get passive income, but just by buying and holding Ethereum, even without passive income, you would have outperformed Zilliqa. So this really shows that unless you don't have a very strong fundamental conviction on the ZIL token, on the team, on the project, if you just look at statistics, just look at historical performance, you might have gotten a better risk to reward with Ethereum than with buying and staking Zilliqa. So that means when you want to take advantage of rallies like this, right, when we want to jump on something like this, we need to know proper exit points. We need to actively trade. Now, how can we do this? One very straightforward way is to use moving averages, as in you want to buy in whenever the price goes above the moving average, and you want to sell whenever the price goes below the moving average, so that you do gain whenever we go up like this by 230%, but you avoid the losses once the momentum turns around. Now, what's important here is to decide what duration of a moving average should we take here, right? A moving average has a duration. It calculates the average price of whatever prices we saw before. So when we go longer on the duration, we see more of a smoothening. When we go shorter with the duration, we see the moving average is closer to the price. So it reacts quicker. It enters quicker when the price is positive. It exits quicker when the price is negative. But we also see a lot of these failed signals, right? When we've got a very, very short-term moving average, we might be buying and selling all the time, incurring trading fees and also potentially buying high over here and selling low over here. The question is, do you want to just buy and sell at the end of the day and then potentially make a loss like this? Or do you want to trade even more actively and buy and sell within the day. So my simulation, the backtest that I've done to determine the ideal duration over here, it just looks at the price at midnight UTC. So are we currently above or below the best moving average? We simply try to find out if we use that approach and we bet on falling prices whenever the price is below the moving average, and we bet on rising prices whenever it is above, what duration here works the best. And so I've built this little Excel sheet, this macro sheet. I did this analysis on the 26th of March. So it's now a bit over 1 month old, but this is how it works, right? So we can simply simulate buying and selling. So we both go long whenever the price is above. We also go short when the price is below. We don't use any buffer, so we are going to discuss that buffer afterwards. We have a trading fee of 0.1%. That's the non-discount fee of Binance. So let's do this iteration. So now we see the calculator doing its magic. You can download this calculator here in the premium membership at thebitcoinstrategy.com. So let me quickly show you this. When you sign up for the premium membership, which is $49 US per month, then over here you can download the exact same Excel sheet and do similar analyses for yourself. There's also, of course, different altcoins here, and there's even a technical analysis course where you've got all kinds of technical indicators, also including tutorials on how to actually build such an Excel sheet. But let's go back to the results here of Zilliqa. So we see the 14-day simple moving average would have worked quite well. We also see some of the exponential moving averages worked pretty well. So here's the 16-day or the 17-day. So the 16-day was a little bit worse than the 17, so the 17 it is. We can also look at this from a chart perspective. So this is what we get. I think when deciding what to use over here, we should simply just go with the SMA. The SMA seems to outperform the EMA pretty much for any duration. So here on the x-axis, we've got again the duration of the moving averages. On the y-axis, we've got the annualized return. In black, we've got the buy and hold line. So basically, no matter what moving average you take over here, even after trading fees, you would have outperformed using that strategy on Zilliqa. So that's pretty encouraging. This is how that then looks like in a chart. Very nice, right? So in white, we've got the Zilliqa price. In green, we've got the portfolio line. Since this outperformance is so massive, let's, instead of checking the linear scale here, let's switch this to a logarithmic scale where each step here is a 10x. So this chart over here is the same as this chart, but this simply shows what happened in the early days. And we can see a pretty constant outperformance here. So the 14-day it is. Let's look at the best simple moving average script. So this is now the 14-day SMA, and we see we have just crossed this. So this is a very bullish signal. Again, this is another perk here of the premium membership. You can download those moving average scripts over here, meaning I've done several back tests, and if you look at various assets over here, you will then get the moving average that historically worked the best for that particular asset. So you don't have to manually adjust this, and you don't just take the random 100-day moving average or anything like this. You take something that historically worked the best in the past. And for Zilliqa, that's the 14-day simple moving average. So that's the current situation. Very interesting, right? So there is a little caveat here though. So you see there's this moving average line here, right? This bold line, but there's also these thinner lines around that. So what's that? That's a buffer, meaning we want to avoid when the price moves just very close to the moving average and creates these wrong signals, right? We want to potentially have a buffer around this to make less trades. So for example, over here, right, we would have exited without the buffer. We would have exited here on the 11th of February, but then we would have entered again here on the 15th just to sell again on the 16th. Right? So this would be without a buffer. Now with the buffer, we would have ignored this buying signal because we would wait until we cross the upper bound. Now you want to know how much buffer is ideal. And so we've got a second backtest. So we now can say, okay, we want to take the 14-day simple moving average. Let's also backtest at the same time an exponential one, maybe here the 16-day. So let's do that, 16-day. And now let's iterate over the buffer. What's the ideal buffer size when trading according to the moving averages. Now this flickers a little bit, right? The macro has to do its job. It moves up and down within the sheet. And in here we see, okay, 2.6% is the best buffer. So let's scroll down. Let's enter here 2.6%, by the way, so we get the charts right. This is then the final performance, by the way. Here, look at this. This is a really nice, consistent outperformance versus buying and holding Zilliqa, right? So Zilliqa is really a good candidate for active trading. Historically, this is one of the best charts when I've done this kind of backtest. So let's look at the buffer. So here, again, on the x-axis, we've got the buffer. On the y-axis, we've got the annualized return. You can see here 2.6% as a buffer would have worked the best, meaning we would only buy in whenever we cross the upper buffer and we would only sell whenever we cross the lower buffer. And this is now where it becomes a bit hairy, right? So historically, we would have not yet bought. We're just short of it of a very minute delta here, but still we have to work with what historically worked the best. And so we are not yet across the line according to this backtest. We still have to wait. And even if we are across the line, right, like here on the 20th of April, sometimes we do get our failed signals. So this is no perfect strategy. This strategy does not have 0 wrong trades. It does sometimes for quite a while just perform sideways. But over the grand scheme of things, I am quite confident that no matter what time frame you use over here, right, even if you do split testing, you only take the first half or the second half of the data, it's still outperformed. It's a pretty consistent outperformance. So this signal, I think, does have a lot of value, meaning I think it makes sense to wait one more day, look whether or not Zilliqa increases in price today on the 5th of May. And if it does, then we might have a potential opportunity. Of course, with the asterisk that sometimes these trades don't work out, right? No strategy wins all the time. Now, I said I've done several backtests here on various altcoins. If you've got an altcoin that's not yet been backtested, feel free to simply request this here within the premium chat. I will then do the backtest within 24 hours. We've also got a neat little premium alerts channel over here, where whenever one of those backtested moving averages gets crossed, we automatically get a message here in this channel. So you don't have to watch all of these charts all the time. You can simply just get into this channel and then act according to whatever message is published over here. And so this is the current situation. Zilliqa is very impressive. The trading volume isn't yet dangerously high, right? That's also another point to look at. When trading volume is very, very high, that's very often when we tend to reverse in price. So the trading volume right now, it's heightened, but it's not at all-time highs. Now we are really at the crossroads from many perspectives. Are we going to shoot up really massively from here as we've done in March of this year? Or are we simply going to have another fake out as we've also seen several times in the past? It's really now up to the next 1 or 2 days. Can we keep the momentum? And if we can, then backtests indicate that we might just be up for another rally. I publish videos regularly. So besides all of this paid premium content, I of course still continue publishing free content here on this channel. So if you don't want to miss this, don't forget to subscribe. A like on this video would be appreciated as well, of course. That will help the channel grow. And last but not least, don't forget to check out this video on Zilliqa. There's a lot of very interesting, valuable insights there as well. So see you in that video, and thanks for watching this one. Bye-bye.